Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to India FinTech Diaries, the podcast where we explore the ideas, innovations, and change makers shaping India's fintech landscape. I'm Elroy, and today's conversation is especially close to the grassroots because we're diving into financial inclusion, women led MSMEs, and what it takes to build trusted financial systems for Bharat.
And I'm Hemant. Joining us today is someone who has been at the heart of India's financial inclusion story, Shweta Pandey, co founder and CEO of ARTH. Her career spans Airtel Payments Bank, YTS Payments, and advisory work with the World Bank Group. And she's one of the strongest voices on gender intentional fintech in India. Shweta, welcome to the show.
Thank you very much. It is my pleasure.
Great to have you with us, Shweta. For our listeners, Arth is an MSME focused financial services company delivering responsible credit, payments, and insurance with a focus on women led businesses. Founded in 2018, Arth serves nano and small enterprises across Bharat with business loans, home loans, insurance, and trade tools, powered by a high tech, high engagement model. With over 6 lakh businesses impacted, 250 crores in asset under management, and over 100,000 active customers across 4 states, Earth is in a mission to reach 10 million households by 2030. Shweta, let's start at the beginning. You worked in the intersection of mainstream finance and also mission driven inclusion. What did you see in the market or really not see that led you to build Earth?
Yeah, I think very important and pertinent question. If you look at it from where I see it, when I
Right,
started my early career as a corporate professional, I did some really groundbreaking work around micro ATMs, micro deposit machines, remittance SaaS platforms. But at the
right,
heart of it was customers who were underserved and underbanked, and perhaps those who were coming from low income households. India
right,
specifically, the large number of low income households come from the proprietors, small business communities, shopkeepers, retailers. That is what India is made up of. That is the Bharat that we see today and we've always seen. And
yeah,
within that, if you look at it, financial exclusion has been a major challenge, not just today, but as people growing up, we've always seen this as an issue, that why is access to responsible finance not reaching low income households the way we all are serviced. And I think many of us in the fintech sector and in the BFSI sector have been trying to address this issue in different ways, and all of us are trying to implement various models. My own
yeah.
core as an entrepreneur has been on focused on large scale social impact businesses. I've built my first startup, in fact, in 2013, which was focused on the migrants community, the domestic migrants trying to send money back home to their mothers, sisters, and families, and how would the money reach them on time? What are the sort of the issues there? And then of course my current journey at Earth, where we are looking at providing productive capital, which is largely your microcredit, including sort of facilitating payment solutions to small shopkeepers and businesses with a gender focus, is a very important step in that direction to facilitate financial inclusion. Over the last, I would say, decade or so, we've touched about a million customers. And our journey continues to propel the small and businesses and nano entrepreneurs to be sort of financially included and get access to credit, access to digital payments, access to the right insurance products. And that's what we are trying to build at Earth.
So, Shweta, you often talk about designing for women's financial lives and not just their financial needs. Can you share how this idea actually shaped Earth's founding thesis?
Absolutely. So if you look at it, and I always say this, right? The model that we've seen, whether it was the Grameen model or the SHG model or the JLG model, the
Right.
access to grassroots capital when it was taken deeper in our villages was via women. And women are perhaps the most trusted borrowers, and bankers, I'm sure, would agree with that. I think from a perspective that what do you need to do to have more women borrow at the right time, at the for the
Right.
right amount and for the right businesses, is a challenge even today. When we were setting up Earth, we of course wanted to take the notion of productive capital to larger communities, which includes retailers, merchants, shopkeepers, traders. And within that, a very important segment, of course, is women. In fact, 90% of our current base is women, even out of the 100,000 customers that we have today.
Right.
And what we realized was that we will have to look at women as independent borrowers. We will also have to look at women as group borrowers, and we know that is a very important model that has always worked. Within that, the idea to say that, there are behind every woman, of course, there is a family, there is a spouse who may be sort of leveraging the same borrowing that we might be doing, that has to be taken into consideration while giving the credit to the women. So that is almost like a design principle change that one needs to have as we move along in terms of providing and designing the right credit products. The second is, there is a sort of a notion that women may not be digitally savvy. And I think this has now been completely proven wrong with the work that we have been doing for so many years. I think what women need is engagement. They need deeper engagement. They need capacity building. And if you do that on a consistent basis, women not only can borrow better, but women can also be great financial planners for their family, which is also a very important necessity from an overall inclusion standpoint. And I
Right.
think the third dimension that we realized was, and I've seen this, and this is a real fact. Maybe it is general in Bharat, right? Failure is not taken positively. Okay, and I'll explain
Yeah.
you what I mean by that. Even as entrepreneurs, if somebody fails, is not taken as something positive, while everywhere else globally, failure is taken
Correct.
as something that you pivot and, sort of you move forward. Look at the life of a woman who is a micro entrepreneur trying to set up a small business in a small town in India. The courage that she needs to borrow to build that business on her own. And if something happens to that business and she has an unexpected failure, which she
Yeah.
perhaps could not manage herself, her confidence completely gets shattered. So, one of the biggest risks that we see is that women who fail once, we don't see them starting up again,
Right.
especially in this segment. So one of the things that we also try to do is look at, women when we see them, whether as groups or whether as individuals, we also try to understand not just what they do today, but what potentially they can do later on. And capacity building plays a very, very important role within that. That even if there is a chance which you have, I have, or she might have, or failing in that business,
Right.
we have to give her the confidence to say that you've taken a loan, your loan is going to be sort of deployed in your business or perhaps in some other activity. That's fine, as long as you stay engaged, you build your capacity, you move in the direction. Tomorrow you want to go from being tailoring to setting up a boutique, it's okay to do it.
Yeah.
That acceptability is very important, and that again is a design principle change that needs to be brought in, to say that it's not about a loan, but it's about responsible credit and it's about capacity building. And that's a lot of work that we do at Earth, especially in the case of sort of gender financing, because credit is not innovative. It's about how you take credit to your customer and to your borrowing base. That's where the innovation is needed. So the design has to work for your customer, and that's the kind of work that we are doing at Earth.
Shweta, we talked a lot about inclusion, but I'd like to spend maybe a minute or two just talking about exclusion as well, right? Because if you look at exclusion, it is actually very multi-dimensional in nature. So you have exclusion that could be the result of finances, literacy, possibly even well-being, and the skill levels as well. So, how do you approach solving these challenges in terms of exclusion in various layers? And in the process, how do you balance building digital tools with the on ground realities of a low trust and low digital environment that is a majority of India?
No, no, great, great question. See, again, we have to have this in mind that no great data, no great risk model, you know, can really solve for what we see, which is the behavior side of the customers and the societal side of things of this customer.
Right,
And the very important fact is that the usual metrics which are imposed for a mature customer is not what needs to be imposed on this segment. and everybody really have to think out of the box to say that how are you going to understand the various biases and the issues with regards to this customer, whether it is unavailability of data, whether it is about social norms, whether it is about collateral not being available, or most importantly what we see as the most common issue is irregular business cash flows,
Yeah.
right? So the way at Earth what we look at is, we don't try to assess the customer from what they might have done in the past, and I think that is one of the biggest differentiator between when you evaluate and assess a mature customer or somebody like you and me versus trying to assess this customer for today and for the future. So even the way our models, our risk model is built, and the way we capture data about our customers on ground, and of course we run a phygital model, which means that all our processes are digital, where we capture
Right.
the data, we are
Right.
with the customer, we look at the business that they do, and we understand how much they know about it, do they have any specific skill and training that they've acquired or perhaps they can acquire, and what are they see as business in the future, what does they think is going to be demand for this month, and how are they assessing it. It's a very very slow, steady, challenging process, but this is what we have been trying to do, is to assess the current and the future while being with the customer on ground, capturing all this information digitally and electronically, capacitating the customer in the process, and then sort of offering the right credit product to the customer, and then staying with them through the journey, which is also very very important, by the way. I think most lenders or most financiers, I think,
Yeah.
miss this point, and they say that customer connect is very important, but what is the meaning of customer connect? And I think a lot of the fintechs are trying to solve this problem, and we are doing the same thing to say that things might change in this customer's life way too fast than we can even imagine. So, as a fintech, we can't be faceless. So, as a company, we have offices on ground, which we call as business centers, where
Right.
customers can come in. We have volunteers, we call them the Earth Mitras on ground. They are continuously in touch with the customers. That's not for repayments and collections, but largely to understand what's happening in the community, how is the market doing, how is the women doing in terms of whatever business that she's running. So, there's a constant relationship building which is happening to understand if there's something that we might be missing, which might have happened in this customer's journey. Second, the thing that we have also done is, typically if you look at the financing ecosystem, is that we have very one size fit all credit products, and I think it's, though I must grant it to our fintech community, that there's a lot of innovation which has also happened on the flexi credit in that sense, where we are playing around with the tenor of the credit product. Most women tend to think that if they take a term loan, and
Yeah.
I'm referring to low income households specifically because that's another big challenge, it will help them to repay this back because they will have smaller amounts, right?
Hmm.
But it actually depends on business to business. So if she's doing a livelihood business, then what should be the right tenor? Somebody has to educate her that, right? And for that you need to have the right design of product, so you can offer her a 1 month product or a 3 months product or 6 months product. Let's say a woman who runs a saloon business and she has a high demand during the wedding season,
Yeah.
then why do we need to offer her something which is a 12 months or an 18 months product? We should work with her to say that what is it that you want to borrow for. You want to borrow for a period, let's say between October, November, December, which is a wedding season. This should be the right amount that you should borrow, and you should ideally borrow for 3 months, because you are going to generate 50,000 and you have to pay back 30,000, whatever that maths works out to be.
Right.
So I think these are the things which we have done in terms of tailoring and sort of providing a more customizable bouquet of how you take credit to this segment to meet the biases, the challenges, and the realities on ground with this customer. And that's the sort of the differentiated approach that we take. Our phygital approach helps us do that because we are a fintech, but we believe that staying very close to the customer is also very important. So we have distributors, we have mitras, we have our local offices. Everybody is on the digital platform, but being closer and deeper at the grassroots level is a fundamental model that we truly believe in, and that helps us to mitigate these biases and challenges that you are referring to.
So, Shweta, I'd like to maybe double click on the phygital aspect that you just mentioned, right? What is some of the design thinking between that models? What are some of the insights that led you to believe that phygital is possibly better than being all digital from an approach standpoint?
I think one is, look at our country, right? It's big,
Right.
it's heterogeneous,
Yes.
it has beautiful variety, and it's hard to believe that, sitting somewhere in one corner, you'll be able to understand everyone's problems and, have all solutions that work for everybody. And I think starting with that first principle approach, we always felt that there has to be a balanced distribution model that
Yeah.
allows us to build trust at the grassroots level, at the same time have enough unit economics in terms of distribution cost to be able to run this business in a sustainable manner. And when we looked at it, given that for many years we've been in the payment sector, and we've set up distribution companies, etc., so we picked up the best of the distribution model. What we did was, as Earth, we said, in these hyper local communities, which is literally at the
Right.
block level or the village level or the chota district level, you typically have small distributors and small retailer communities, and then you have these volunteering groups. We will have to leverage them and bring them on our platform. So one of the big things is that we will have almost like office in a larger area, where we can invite this larger community of distributors, retailer communities, and the volunteers come and have discussions and forums with us, where we get to know that what is the need of the market, and where they are sort of the places where they live, and then sort of go deeper from our team perspective into those locations and offer the right product. So the discovery process in that sense becomes much easier. So take for example, you have, let us say, a farmer distributor who's sitting in some very small block in somewhere in UP, and that distributor is on our platform, who is engaging with the chemist, all the chemists and the small clinics, etc., etc., in that small villages and blocks. And that information is available to us via the distributor partners. Once we have that information, we can then go back and engage with the larger customer community to say that what kind of products that we can offer to them, which we then channelize via our direct teams and via our volunteering base to
Right.
those customers, whether it is women customers, whether it is retailers, merchants, etc. We felt that this approach has helped us over the last 5 to 6 years, including the COVID period. In fact, it was an
Hmm.
eye opener for us that how did we sustain and sort of how could we go through this whole difficult process, was because of a deep engagement at the ground level. And Phygital as a model really helped us, instead of being completely faceless as a platform or being completely traditional as a branch based model, because we had these connects on ground, because we had our distributor community, because we had our retailer community, because we had our volunteers, our Arth Mitras on ground, we could be more deeply connected with our customer base at the ground level, while the information was all electronic and all digital. That helped us to
Right.
have the economies of scale while staying very deeply connected with our customers. So the whole thought process around Phygital is build trust, stay connected, go deeper, know the actual problems, have the right products for the right customer segment, and understand that even a Lucknow might differ from a Kanpur, or a Kanpur might differ from Gurgaon,
Correct.
or a Gurgaon might differ from Jaipur or Ajmer or Sikar, etc., etc. And every hyper local community will have its own dynamics. So that has really allowed us to be very focused, slow and steady growth, very conscious growth, and most importantly, stay as a very responsible financing company to our customer segment.
Shweta, also talk to us a little bit of some of your products and solutions that you have. For example, Art Payment or Business Prime, right? Which actually offer local merchants a payment device that not just digitizes their sales, but also lets them initiate credit, which can
Yeah.
actually be a very powerful distribution infrastructure. So, talk to us a little bit about these products and what's been the uptake like as well.
The payments as a enabler for the small trader or the business community now has been proven, and thanks to some very large fintechs in the sector for the last 10 years, I think they have done some groundbreaking work. What we realized when we were providing productive capital and microcredit to our customer segment, there is a large segment who are the small shopkeepers and retailers.
Right.
In some point in time, what we felt was both from a risk management, data collection, customer satisfaction, enabling their digital payments, that while we are offering them the credit product, we should offer them the embedded payments product along with it. If you see in the market, what has happened is the other way around. People have gone ahead and deployed payment devices and QR codes, etc., and then
Right.
have tried to assess the transaction data and tried to offer credit to the customer. What we see around the vendors and the merchants, etc. We took the different approach because we had figured out how credit could be provided at the last mile. We said this is the right time when the customer is taking the credit, because now we've assessed the customer for credit. This is the right time to now see that can we facilitate and enable the same customer on the payment solution. So we offer them a sound box, we offer them a QR code. This goes along with the credit product, and that really helps them to get two products at the same time, which is very important. Now, this has two or three different benefits, not just to the customer, but also to us as an organization. One, this enables the customer to pay the EMIs or the repayments at a flexible in a flexible manner on a daily basis or a weekly basis, which is something most of these customers require because they have these uneven cash flows. So they
Yeah.
have this better sort of comfort because they know that I am their financing partner. I'm not a payments partner, I'm their financing partner. And with that, I have also enabled their payment solution. So they are more comfortable in providing that information to us. Second, at any point in time, if they need greater credit or they need capital for something else, they can basically on the application inform us, and that allows us to be able to offer them those services really on a go basis. So they don't need to go and look for other financing partners, other payments partner, other lending partners. The relationship or the retention stays much longer, so it's good for us and it's good for the customers that if they're doing the right things, they continue to get access to credit and access to capital while being digitized, and they have their settlements with the same financing partner that they took the borrowing from. So it's a sort of a deepening of the relationship, and that's what we are offering on the payment services. So every customer is actually getting a payments device with the credit product. So that's what we do at the moment. Within that is the business prime proposition, where we also offer them healthcare benefits along with it. So if they want to opt in to say that along with my payment device, also give me sort of free doctor consultation, give me a 360-degree insurance for my shop cover, these are slightly more value added services that the customer might opt in. Now, this is a bit of an education awareness thing, right? When you give the
Yeah.
credit, you have to tell the customer, and the customer has to opt in for it. And we are seeing some slow and steady sort of uptake on this, that now that they've taken a decision to get the loan, which is their most important catalyst, they have now got the device which anyway somebody else was trying to sell it to them, but they have greater comfort with us because they've taken the borrowing from us. And would they want to take now these different insurances which somebody else might be selling it to them, but this comes as a one stop solution for the customer. So we are seeing gradual uptake, and the whole idea, if you ask me, around this is that the most important catalyst is the productive capital. But at the same time, if we are able to offer to them the other financial products so that they don't have to go anywhere else, that would be almost like a sort of a one touch engagement with the customer, where the information is also being shared, education and awareness is also happening, a right decision can be taken by the customer. That's what we are trying to do around the business prime. On the credit side, we have the secured loan product for the borrowing base if they want to take a larger loan to sort of improve their shop, increase their shop, set up their shop, etc. We have the unsecured, the collateral free business loans, which is
Yeah.
ranging from 50,000 to 2 lakhs. So we have those kind of credit products. And of course, we are very soon going to introduce the solar loans, which is another big program that we are going to introduce this year as part of our sustainability initiative, the solar loans, because that's again a big need that we are seeing from our customer segment, especially from the small towns and villages coming in. So we will then start facilitating the solar loans as well. So that's sort of our product portfolio at the moment. And we're very focused, by the way, on certain occupations. We do other occupations as well, But we also realize that it's important to segregate the customer base within different clusters of occupation, because that allows us to go deeper, whether it is a general store, whether it is a dairy agency, whether it is a poultry business, whether it is a saloon business, garments. So that sort of segmentation helps us to understand our customers' trade cycles and needs also better. Now, these are all the things which are part of our distribution model, and the approach that we've always taken is phygital, along with the payments as one of the most important enablers for this segment.
Got it. Shweta, one of Earth's strength has been its gender lens. And in your experience, do women entrepreneurs approach credit or savings differently? And if yes, how does that influence the design of the product or the service for you?
Yeah, so women are actually very interesting. It's hard to have understand how they always think. So, I think forever what we have seen is credit is a group decision. It's like a family decision. Okay.
Right.
And rightly so. I'm sure you would also appreciate that when we are, you know, doing some borrowings, it becomes like a decision on the table. So I think what we have seen over the past many years is whenever there is the credit need which is risen, right, the family is involved, and especially the husband is definitely involved in that process. There are instances where we've seen that the women in isolation have tried to do so, and sometimes those decisions have not gone down well.
Hmm.
That's very important. But from a savings perspective, for sure, what we realize when they do the borrowings, and this is something, maybe this is grassroots information or insights that when we talk to a woman we get to know, there is always this thing that whenever she has this pot of cash, or whenever she has this liquidity, right,
Right.
he does try to find ways to save that. So even if you gave her credit, right, there is some bit of that credit has gone into a very sort of organic savings spot somewhere.
Hmm.
And she
Got it.
has sort of dwelled into it. And other decisions on savings largely is that if she earned from that business, she would always ensure that the money has gone to her children. And the second decision for her is always to put that money parked as cash, or parked in the bank, or parked with a immediate family member who she really trusts. So the two decisions are not connected. But if credit is taken, it's usually a family decision. And once
Hmm.
credit is taken, if there's liquidity, she does engage in savings from the credit product as well. That's what we have seen large number of women do, because they know there might be an exigency which might come at some point in time, so she will save it for that rainy day. And savings on a standalone basis, whatever
Yeah.
she will generate, whatever she will gain, her first principal decision is always children, and the second decision is to say that how do I just go and sort of park this money with, the nearest possible method that she has. If it's cash, it is cash. If she has a bank account, then she will find a way to hit the branch. If she's not, then it is her real sister who will have it. So they'll find the ways to actually save that money, but they are not directly connected. I think they take decisions on these two differently, but
Hmm.
at the same time, at the root of it, it's all going towards what is the pot that she's building for her and for her family, whether it the starting point was credit, or the starting point was she got some money and then she saved somewhere. I think women in general are not taking credit because they are super ambitious. That's not what we've seen so far. I think there are a very few, but the large part of the credit cycle that we are seeing is, of course, starting from sustainability, livelihoods, going towards growing little bit. All of that is going towards really growing and supporting my family. I think that is the bottom line that we hear, and we continue to hear most of the time. And that's really what,
Understood.
as financial capital, right? That's her
Understood.
important thing.
Understood. And Shweta, a lot of your work is around new to credit customers, and you touched upon a bit about doing credit underwriting for this set of customer. Can you go a little deeper for helping us understand what kind of data signals, whether behavioral or any other data signals, are you looking at, considering a lot of this is unsecured loan, there's no collateral backing it. So if you can just go a bit deeper on that element.
So, like I said, the mature metrics cannot be imposed on this segment. And I think when we even started, if it is a retailer, of course, the easiest answer always was that, is there some transaction data available? Is there a register which is available? Is there
Yeah.
some transaction receipts which are available? So that's one side of capturing data, that what's happening in the business apart from what the customer themselves are self declaring. And by the way,
Mhm.
one of the thesis which I've always had is that the poor customer always is honest unless proven wrong, right?
Mm.
And
Yeah.
I think everybody in the development sector will believe in this, that you know even if they self declared some information, unless they are forced, or they have some massive necessity, they would not be deviating too much from it, because there is a fear, there's a morality, there's a consciousness. And poor customers usually, and in majority cases, tend to be honest. And I think that is a very important thesis in our risk model also. So what you will see in our model is that we of course capture a lot of self declared information which the customer is self declaring in the first instance. Let's examples like, what do you do in your business? Which are the items that you sell in your business? What are the typical prices of the items that you sell? How much do they cost you? How many times do you go and pick up these items from your distributors, from the local market? So these become very important pieces of information that the retailer or the customer or the small business owner or a woman is declaring to us. And that gives us two things: one, understanding of what they do, right? Because do they even understand what they're borrowing for, and how are they going to use this money? Second is purely the understanding of the business. Do they actually run this business? How successfully are they running it, or they are sort of struggling with that business, they're struggling with the cash flow? So what we try to create from all of this data is both the intent and the ability, narrowing it down to the cash flows of the business on a self declared basis. The second thing we also do is, of course, we've also invested a lot on AI, and our team members, when they go on the field to do the verification and talk to the customers, they take, all the visuals and the video environment, and where the business is operating, where the women is operating, etc., etc. And we use a lot of those information as surrogates to see that how is the potential of that market, how is the sort of the stock looking like. So we do a lot of the visual interpretation also. There's nothing that we have taken so far, by the way, which you will hear from me, which applies to a mature customer, that we took a bank statement, suddenly we are doing bank statement analysis. Because there's nothing called bank statement analysis in this segment, if you ask
Right.
Yep.
me. it
Understood.
it
Understood.
it is useful, but not imperative. It's not a decision maker. It's useful to have it, because
Yeah.
Yep.
everybody has a bank account now, so it's
And
useful
I
to have
never
it.
give you a true picture also.
It never give you a true picture. So we do capture if it's available, but this is our fundamental model, is to say that we will ask questions to our customers. Those kind of questions are used to, one, generate the intent, the understanding, and the ability in terms of the business. We also try to generate a cash flow basis, the numbers that they're declaring in terms of what they buy, what they sell, how much they buy from where they buy. And then of course we do a lot of the visual work, which is around the market area, the penetration, where they work, how is the market, how is the village. We do all of that. And then of course there are others which are public utility information. If there is a bureau information available, we do consume bureau, because now of course the bureau records are also growing, including in the microfinancing sector. So we then layer that information on top of it to really project, right, what would be these customers cash flow over the next 6 months, 9 months, and 12 months. That's what we do. And
Got
basis
it.
that projection, we try to assess that how much will be the ability of this customer to pay today. Now, the only important thing which I think most of us in this category are struggling with is that there has been a lot of over leverage in the past many years. Because there has been a lot of over leverage which has happened in the customer segment, for for reasons that even the customer cannot explain, because many people came to me and they gave me the loan, so I took the loan, kind of thing. Or I did not know how to use it, I spent it. So those kind of things happen. Now these are risks that we have to budget for, to say
Mm.
that what wrong decisions customer might take within the week, within the month, and how do you sort of take those risk aspects largely let's say miscalculations by customer on taking additional borrowings, which is the biggest issue right now. And the second is that they may not use the loan for what they said, so it goes from productive to consumption is another risk. So I think these two risks are most important, which we have to budget for, and we try to do that. There are a few things that we've tried to build basis the large amount of data that we've gathered over the last 5 6 years, that what is the normal thing that we see in certain villages, in certain areas, in certain segments, etc. And we go with that view. So that's the work that we are doing, which is different. You did not hear any bank statement analysis from me. You did not hear any sort of any other underwriting which is happening using a complete bureau analysis. But we go with the what we call is the cash flow based underwriting, which is self declared, on ground evaluation, community engagement, understanding the village and at the block level, and of course trying to predict what we think this business will do on a standalone basis, or with the women will be able to do in terms of whether she's running a livelihood business over the next 6 9 12 months, and then offer them the right credit product.
Got it. Got it. A lot of it, Shweta, also resonates on some work I was doing with affordable loan against property or home loan. And yeah, a lot of it resonates except one part. There was some work I was doing around agri loans, and this hypothesis that poor are always honest was challenged in those cases when the loan was being given by the government, not by private. In the private, of course, it still stands. But when it
Right.
was given by government, the general thought was, ये तो हमारा हक है, अब थोड़ी इसको थोड़ी वापस देना होता है.
No, but see again, please let call this out, right? The morality of
Yeah.
it.
Yeah.
If you spoil the poor by giving them
Hmm.
avenues to be spoiled, it's like a kid in the house, right? And then we say,
Right.
oh, the kid is spoiled. So I think if you
Hmm.
just leave the poor on a standalone basis and just assess them on that front, what I'm trying to say is
Hmm.
they're honest, they're not forcefully dishonest or people who want to do wrong with
Intentionally
you
dishonest is more like.
intentionally.
Hmm.
Yeah, they're not like that.
Hmm.
But if you're sort of
Got it.
feeding them and sort of over leveraging them, everybody is trying to give them credit, everybody wants to give them QR code. It's like, you
Hmm.
know the same customer is being over leveraged, right? And their knowledge and understanding is limited.
Right.
And I'm not saying it's all. Of course there are the 2 3 4% where there are, you
Yeah, yeah,
have
yeah, of
to
course.
identify those outliers, but majority are
Right.
not. So that's been my experience, and I am from the segment, and I love my customer, and this is how we worked with them. They have taught us so many things. As an entrepreneur, I think nobody can beat the entrepreneurship heart that they have and the mind that they have.
Right.
So I'm very grateful to our segment, so I'm always fighting from their side. So
Understood. Understood. And
right.
in the same nerve, Shweta, you took a unique decision even before regulatorily it was given as a compulsion that during COVID you launched a product called ARTH Rahat, which was interest-free loans for your
Right.
existing customers to restart their economic activities. We are very, very curious to understand how did that decision pan out, and how, and the experience that you gained with that decision, has that shaped some product decisions later after we came out of COVID?
Yeah. I think, COVID taught so many things to all of us, right? And I think when we were really trying to survive, I think I'm sure a lot of the young startups, we were also fairly young. I mean, really three
Mhm.
years in the business. What we realized was our customers, when so everybody was doing this calling activity, right? That okay,
Right.
how's the market, दुकानें खुली हैं कि नहीं खुली हैं, आपके विलेज में क्या हो रहा है. There was so much fear, and let's not forget a lot of their family members were in that migration mode. And what we felt was that conversations like repayment आएगी कि नहीं आएगी was really completely non-empathetic, right? And अब क्या होगा और कैसे होना चाहिए. So we turned the conversation to say that what is happening in your family. That was, I think, the first step that we took. And we took what we started at that point in time is to say that tell us about your health index. कौन कौन फैमिली में है, कितने लोग हैं, what is the health situation, what is the cash flow situation, who is in Bombay, who is in Delhi, who's coming back. So all of those data we were collecting, right, on the calls. We were
Right.
not asking questions of repayment, because if they had the money they would of course say, भाई कोई आने तो नहीं वाला है, because somebody is going to just say that हाँ मेरे पास रखा है, whoever will come I'll give it. We know that for a fact, but nobody was going to go. This is during the peak of COVID. So we said, don't worry about it. We collected this enormous amount of data, and then we went into, with our DS team and the data science team and everybody put together, and we said, hey, guys, lending is dry. Nobody is going to do financing. Everybody is on standby. And now at this point in time, nobody knows for how long this is going to continue. So we said, okay, one way of looking at it is to say that wait and watch and let's see what happens to the customer and will they come back or not, and figure out a moratorium which every lender was waiting for. But remember, moratoriums don't work well for poor people, right? This is
Mm.
someone who's already unable to pay or is in tough challenges. So how will a moratorium help where they will have now a large pool of money to suddenly repay? So we
Correct.
felt that maybe this is the time when they need rahat and they need support, because whenever they come back, they will know that you are that entity who stood by them. Number one. Second is, if you give it to them right now, they will survive, because for them to even revive, they have to survive. Because that word needs to come first before revival. Right? If they don't survive, they're not going to come back and show up, right, for business. So we launched this very simple product and we spoke to our customers. So different customers, different needs, depending on the size and scale of their business, what they were doing, how big was the family, what was their issues, etc. We launched these interest-free loans, and we also said payable when able, which meant that whenever you're going to come back, and of course we took a time period of 6 months, you please come back and pay that. Okay, and you tell us what will be the right way you want to pay. You want a structure to say that I will pay it in three emis or in three terms, or whether I want to pay it immediately, or whether I want to use this money to repay my previous loan, you know so we kind of gave them this flexibility and this sort of liquidity and capital at that point in time, which we felt was almost like the survival loan, and literally we called it the rahat loan. And we said, we are here, you don't worry about it. There's not a lot of money, there's not a lot that we can do, but as your financing partner, we are providing you this. When you come back, you hit the road, you pay us. So
Mm.
payable when able, and how you want to structure it, you tell us at that point in time. And you will not believe, I think that was our best experience. A lot of our customers, whenever it was of course coming back, so many of them, whatever happened in their families, heartbroken completely, their businesses were shut down. Especially if you see the saloon, tailoring, all these business completely went out. So they were of course in a very bad situation, but when we started re-engaging with them, they came back and they discussed with us that how they wanted to pay. And gradually when we came back, we, I think, had one of the best portfolio qualities. I'm not saying others did not, right? But we as a much smaller organization did not suffer as much, is what I'm trying to say, purely because we stood by the customers. We gave them what was needed at that point in time, not just interest free, but we gave them the possibility that you come back, pay when able, talk to us after 6 months. We will start calling you, engaging you in, let's say, 4 months, 5 months, to see how things are shaping up. And when you come back to us, and we will figure out how you're going to get this done. And that also gave us data points what they were thinking. So, for instance, a lot of women said, now I'm not going to do anything. Right now, things have to restart, really have to rebuild our families. So all those things also happened, but the best thing was that your customers came back to you. They were not running away from you, and we could rebuild the portfolio. The customers slowly started paying back, and they stayed with us. So this is what we did in the rahat loans. And as part of that, we have launched another very important thing, and I would love to speak about it if you have
Sure.
a couple of minutes on that, what we call the Sahyog program. And I really hope that we are able to show some success so we can take it to our ecosystem partners and our peer groups in the community, the NBFCs, the fintechs. There is this thing around, unsecured loans are risky. Unsecured business loans or unsecured category of customers typically have higher defaults. And over the last 2 3 years, we've also been seeing a lot of what is referred to as businesses not succeeding. Hmm?
Right.
But hey, let's understand it, right? Every business fails or succeed. Like, what is that number on these startups, right? 99%, 95% startups fail or something like
Yeah.
that.
Yeah.
Why does this not apply to a small business owner, by the way? Has anybody thought about it? It applies to them also, right? Not everybody
Correct.
succeeds. So any productive capital that you're going to provide, you have to budget for some risk. You also have to budget for that they will pivot. You also have to budget for that they may have days when business will not happen, just like any other business. But the our sector in general does not consider that as a positive. This is not a conversation that we do as an ecosystem. We expect that if we gave it to you a debt, you will repay it back on time every time. And that's a major shift that we have to bring in as an ecosystem. So what we started doing to demonstrate this information, so we created this program called the Sahyog program. So every time through our systems, when we get the dispositions from our customers to say that business permanently closed, or this was somebody who was a first time entrepreneur or new to credit to start a business, and then business shut down, and has now the customer sitting at home unable to repay and things like that. So we take all of that data, we consume that data, we analyze it basis a sentiment analysis that we've built, and try to segregate the customer between genuine and non genuine. Okay. And all of this genuine information then we process and give it to our foundation and welfare teams. So we have a very focused social impact, social welfare team. And then they do these counseling sessions with these customers who are classified under genuine, right? To understand what really happened. So if they feel that there are possible solutions, so we've divided certain solutions into the diagnostics of whether this person can do a job, whether this person, if this person has a home or a shop, can they open a CSP point or a Grahak Seva Kendra, or they can be facilitated via government programs which a partner can facilitate, or there is an insurance which can then cover up for something which may have happened as a health reason, that's why the business is closed. So we have these diagnostics and we try to layer the customer across many of these segments and present their data to say that, hey, this is a customer who's not saying that they don't want to pay. What they need is genuine help and genuine counseling. And that's the program that we have been running. And what we have seen in our pilots that we have now run for a few months is that any customer who've gone through a counseling process and a diagnostics to say that what will they do next, if we can handhold them, then they start using that, they become a beneficiary of that program. And as a result of the beneficiary of that program, then they start repaying you back also. And that is a model that we're saying that how do you, and this is and I love this space, by the way, so I'm very passionate about it. But the concept of the productive capital also needs to become failure capital. And as a journey of failure capital, you provide them the right tools, the right business tools, the right capacitating building tools, and take them towards a space where they can come back as a formal borrower. Otherwise, what's going to happen? I'm sure you know what's going to happen, right? We will treat them as a normal customer. We'll push them back because they will either hide, they will abscond, they will go somewhere, and we will push them back into the informal sector. And your earlier question of being talking about exclusion, we as a segment are pushing them back to exclusion, genuine customers. And then they will have denial of service, and then they will start moving back to the informal sector. That's not what we all want, right? In the development space, we want this customer to get the right tool. So I think the crux of this is that if we are really responsible financing organization, and we at Earth, we definitely think that we provide access to responsible finance, then the word responsible needs to be taken forward with that urgency and seriousness. Wherever possible, we can't solve everyone's problem, but wherever possible, build the right tools to offer this to the customers, and to whatever scale which is possible, to whatever scale that is possible, we should be able to provide that support and bring them back to the ecosystem as a formal customer, and not push them back into the informal economy again. So that's our Sahyog program, and we are running that within our foundation as and championing this cause on behalf of customers who have inability to pay for reasons which are genuine, and work with ecosystem partners to try to scale that program. So these are all learnings which have come post COVID, and we are taking them forward as someone who really want to be with our customers.
Got it. Got it. Got it. So, Shweta, looking ahead, what excites you about the future of inclusive fintech? Are there like new technologies or approaches, for example, AI, agent-led models, embedded finance, that could reshape access and trust? Or will they lead to more biases considering the training data itself, which is getting fed into it, is slightly historic and may have biases inside it?
Yeah, I think, like for everybody else, we will have to be cognizant and mindful of how we use technology and all the AI tools for this segment. We are using a lot of technology and AI, like I said, to discover a customer, to discover a business, to discover a profile. We are using a lot of AI tools. But I am specifically, in terms of the future outlook of Earth, very, very excited because we are using technology in a way to build a larger base of customers for the customer. As an example, the group model, which is the JLG model, we are building a digital JLG approach of how women who are in different villages, part of the group, their information can be captured. How can we conduct center meetings better? So we are really rethinking and trying to mitigate the risk of, the credit product, which is in line with what the customer requires. And that's what really excites me. The second aspect is the use of data, right, which is so called alternate data. I think it's going to be a rather smooth and steady journey, especially in the segment that we operate, which is the nano and the small business and the livelihood segment. In that, I think we all will have to first continue the journey of data collection itself, because I don't think we have got all the necessary information to be able to say that I have alternate data to assess this customer. I think we'll have to be very balanced and grounded to go through this journey before we start making decisions on social profile of my borrower, etc., etc. So I think
Hmm.
that's a slow and steady process, and we have to be very balanced. We also use it, but I think conscious decisions are very important. And then, of
Understood.
course, the third final step is, the government as an enabler, because I think the one of the very good things which are happening is, whether it is our regulator, really some really good stuff coming from the Reserve Bank of India, the support ecosystem that we have, government's own machinery and the state chapters, really facilitating the nano and the small business category, giving them the right tools, bringing up on the conversation table, because this was not on the conversation table. I think MSME is the buzzword, if we hear, and within the MSME, the 99% is the small business owner, which is really a small retailer, a livelihood business. So I think that itself is like, giving us a very good positive future prospect for our segment, and I am very excited about it. So one is continue to rethink of process redesign to offer credit payments product better to our segment of customers and mitigate risk. Second is use data in a more balanced way, and the third is align ourselves to what the government and the central bank is telling us, and use the tools that they're offering, and put the conversation on the table about the small and the nano business owner. Things like what we are doing on Sahyog, things like Rahat, things like failure capital. So they should become mainstream conversation.
Shweta, thank you so much for joining us. Your work is a powerful reminder that inclusion is just not a feature, it's actually an entire framework that we need to use. And we're excited to see how it continues to reimagine financial systems for Bharat.
Thank you. Thank you very much for having me. And like I said, our mission is to reach 10 million households by 2030. And I hope with all the work that we are doing and the support from the system, and these kind of conversations gives us a lot of positive and a lot of motivation to be in this direction. So thanks again. Thank you very much for having me.
To all the listeners, thank you for tuning in to another episode of India FinTech Diaries. If you enjoyed this conversation, do subscribe and share. We'll be back soon with more insights from the world of Indian FinTech. Until next time, stay safe and keep building.